Hi, good evening, everybody, or everybody in KL, and good morning, anybody in London. It's Mark von Grundher. I'm a director of Benham and Reeves, and I'm based here in London. And we're going to start now. So thank you so much for everybody attending. Today, I'm joined by my co-director, Vida Mera, who's our tax expert, and he's going to give an update on the taxes. Then I'm joined by Melvin Coe, who lots of experience in London property, almost as many years as me. And Melvin runs our Malaysia office, looking after our Malaysian clients with his team. And Melvin's going to do a little talk. And then finally joined by Lucy Headley from Eco World. And Lucy's going to join us at the end for questions. So the four of us are going to be happy to answer any questions anybody's got. I would say, please don't use the chat function because we don't use that. Use the question and answer section at the bottom if you're familiar with Zoom, which I'm sure everybody is. If you could just go in there and put any questions. We've actually got quite a few already that people have asked before the event, which we're going to work our way through. But if there are any burning questions of anything, of course, property related, then please do give it to us. So to start with, I'm gonna give a quick update on what's actually happening here in London. As I said, I'm based in London, I work in London, and I'm gonna give an update on where we are and what's happening. So as we emerge from life in lockdown, the property market continues to surprise us all here. And can you believe that London house prices have climbed 6.2% since we first went into lockdown a year ago? That's the first house price rise during a recession in modern history. And in fact, while GDP actually fell by 10%, the total value of London property actually increased during the pandemic to £1.8 trillion. Another first where GDP and house prices diverged to such an extent. It's a clear endorsement of the resilience of London property. On the sales market, the year got off to a great start as the average cost of a London home rose above £500,000 in January, with buyers desperate to get the zero stamp duty on offer. Halifax, one of our large building societies, showed that a year after the first national lockdown, UK house prices in March were up 6.5%, which is quite remarkable. Rightmove, who are the UK's largest property portal, they show an average asking price rose 2.1% in April. That's the second time in the past 5 years that it rose so much in a single month. And almost a quarter of the sales that were done were properties on the market less than a week. This was the strongest spring sellers market in 10 years. Rightmove actually called it a buying frenzy. And let's remember, this is all during a lockdown. Zoopla, who are the other major portal, showed that the recent budget caused an 80% spike in buyer demand, meaning the supply of new homes for sale this year is down 13%, which is a key driver for rising property prices. Data from research company Lonres found that Q1 had the highest number of sales for Q1 since 2016. That's in 5 years, when investors rushed to buy before a tax increase. All price brackets recorded an annual increase in sales, but the market under £1 million was the busiest, with a 52% increase in the number of properties sold compared to last year. And this was confirmed by Land Registry, which revealed a surge in transactions in February with over 147,000 property transactions. That's 48.5% rise over February 2020. And that was partly due to completions, trying to complete before the original stamp duty holiday ended. Spring is always the busiest time for London property, And in spite of the reduced stock levels in the first week of March, the number of sales that we at Benham's aggrieved was up 12% on last year. And valuation requests were up 27%. And our own research shows that since the first lockdown, there's been about 50,000 sales in London alone, with 65% more sales across the outer zones. And my favorite stat is what the super rich are doing at the moment, because they're a key indicator on what's coming. And they've been buying up London more than any other city in the world. They're lured by the weakness of sterling and the conclusion of Brexit. And in spite of travel restrictions and 3 lockdowns, international buyers spent a whopping £4 billion on properties in central London above £10 million, which is more than any other city, confirming London's status as the world's leading wealth destination. And things in London are really quite good at the moment, with the stimulus measures in the budget, including the extension of the stamp duty holiday and government-backed 95% mortgages, historically low interest rates, which support affordability, world-leading vaccine rollout. Who wouldn't want to be in London with the vaccine rollout going on? The detailed roadmap out of lockdown. These have all resulted in a renewed confidence, and I'm actually personally confident that activity will remain buoyant for the foreseeable future as savvy investors continue to recognize this is a window of opportunity. If activity does slow, the severe shortage of available stock should prevent price drops. And for me, the headline in the Times, which I actually had to read several times, said it all. Housing stock is likely to run out in the next 2.5 months. Can you imagine that? But those who worked through the pandemic simply haven't been able to spend their money as they've been stuck inside, which according to the Bank of England has led to £100 billion in savings, which will get spent. And at the top of the priority list for many people is finding the perfect home. So turning to the rental market, across our 18 London letting branches, we've been busy over the last year. And in fact, we saw a 19% increase in inquiries during March this year compared to the year before, although there continues to be excess supply due to reduced travel, with short-term properties being offered on the long-term market, which has led to subdued rents and slightly longer void periods. But I always said this would be temporary, and we're now seeing rents increase, albeit a little bit slowly. And as London reopens, we expect a recovery of the lettings market and rents returning to pre-pandemic levels. It's inevitable, however, that the lockdowns have forced people to reassess their needs. And on the screen, you can see my slide of our most recent survey where we compared what tenants had told us in 2019 compared with what they told us that were the top of their list in 2020. And it threw up some pretty fascinating insights. Proximity to green space was flagged as more important than travel. You've got to imagine a lot more people were working from home, and they see that as the future. High-speed internet is top of tenants' wish list today. And again, that feeds into the working from home. And that's closely followed by outside space, whether it's a balcony or a terrace, just something where people can sit out on. And these trends we foresee will feature for the long term. So when you're buying as an investor, you should bear them in mind because they could affect what the buyer who buys after you is going to want. So turning to my favorite subject, why London? let's not lose sight of what really matters. London has proved time after time that it's an extremely resilient city. London is an international hub for business. The city has an extremely strong economy. It's a thriving business outlook and prosperous jobs market. Those are among the reasons many people choose to live here, as well as the life, the restaurants, the theatres, the safety. There are so many reasons why people choose to live and work in London. London for me is a bulletproof investment. It's always been the safe haven and one of the world's most trusted asset classes. Remember what I mentioned about the super rich? That's why they come here, because of the transparency, the security, and its ability, London's ability to deliver a regular income and long-term capital gain, even in times of wider uncertainty. It means London property is the place to invest money in a stable asset class with low volatility. London leads the way with the highest concentration of financial and professional service firms in the world. It's a leading international or global tech hub today, leading global academic hub as well, consistently ranked as the world's most popular and top student city. And overseas students are a key part of the market, the rental market, with London universities welcoming the highest number of international students in the world. And over the last year, they have been subdued because many have not been coming, but they will be coming, and that market will return, and that brings a lot of demand in the rental market in London. The doomsday scenarios predicting a mass exodus from London, they were simply wrong. And in fact, people searching for a new home in London was 10% higher during the pandemic than it was a year before. A recent study by the LSE, the London School of Economics, revealed that there had been zero evidence of any exodus, of any major exodus of office workers. London property is an attractive investment. Remember what I said about the super rich, but this is echoed by Knight Frank's 2021 wealth report, which revealed that 26% of ultra high net worth people plan to purchase a London property in 2021. So another good question I love very much is why now? So if you can afford it and you're ready, then that's the best time for you to buy. And after the interest rate cuts last year and the Bank of England base rate at only 0.1%, borrowing has never been cheaper. In addition, developers are offering good deals, as many have completed units which they need to sell. And even though sterling has appreciated a bit, it's still below pre-Brexit levels, which is a real advantage for international buyers. I honestly believe this is a time of opportunity, a great time to invest, and which is why I've personally invested recently. So turning to predictions, most researchers have upgraded their forecasts now for 2021, mainly in the wake of the surprise pandemic property boom that we've seen. Savills previously forecast that house price growth this year would be flat, but they're now saying 4%, which we concur with. We concur with that due to the speed of the vaccine rollout, the relaxation of social distancing measures, and government support for individuals and businesses. Prime central London is good value after 6 years of price adjustments, leading to expectations that the prime central London market should see a 7% increase in 2022. Similarly, Knight Frank increased their forecast from 0% growth in 2021 to 5% now. And they expect London prices to rise by 18 to 20% by 2025. Yet even with all this positivity, it's still important to target your investment to get the best return. And apart from price and location, you should consider yields, potential for capital growth. whether it's a regeneration area, and the reputation and track record of the developer. And the keys to success, the three main keys are meticulous planning, on-the-ground knowledge, and a trusted independent partner. And that's frankly where we come in. With over 60 years of experience in the London market, 18 branches in London and 8 overseas and internationally, including a local office in KL run by Melvin and his fantastic team, our focus is always on our clients to help with anything clients need. And today we offer a complete one-stop service, investment advice, so where to buy and what to buy, handover and snagging. You don't have to come to London, we can do everything for you. Furnishings and refurbishment, we can furnish the flat for you to make it rent for the maximum rent you can get and let quickly. And then handling the lettings, collecting the rent for you, dealing with property management so the tenants don't have to call you in the middle of the night if anything goes wrong, to even completing tax returns. Vida's department looks after tax returns for a large number of our overseas clients. And we do it all in-house. Nothing is subcontracted, so we never get let down, so we never have to let our clients down. Another unique difference for us at Benham and Reeves is that we, and when I say we, I mean our directors, my co-directors, and our senior people, we often invest alongside our clients in the same developments and locations, putting our money in, clearly demonstrating our belief in what we recommend, using the exact same research process that we recommend and provide to our clients. I really believe we'll all look back on this as a time of unique opportunity, a time when there were quite a lot of people panicked, desperately exiting the market because they thought that London property was over and everybody would move out. But those who haven't panicked and have an eye on the bigger long-term picture will make some brilliant investments. So that's the end of my very quick update on the market. And I'm now going to hand over to my co-director, Vida, who's our finance guru, who's going to talk everybody's favorite topic, which is taxes. He'll go through them all quickly for you and give you some recent budget updates. And then following, as I said, Vida, it's going to be Melvin from our KL office. And then Lucy will join us, the three of us back, to answer as many questions as you've got. So I can see some coming in now, so please keep them coming. Thank you very much. Vida, over to you.
Hi, Mark. Thank you very much for that. Can you hear me?
Yeah, we can.
So I can't start my video, Mark. I can now. Thank you. That's great. Thank you very much, Mark, for that talk, and welcome everybody. My name is Vida Mehra, and as Mark mentioned, I'm the finance director for Benham and Reeves. And as part of my role, one of the things that I do is to help and advise clients when it comes to considering all of the property taxes that will affect their investment. And after Mark's talk, if you're as excited as me about the London property market, then it's perhaps something that you will want to be considering. So I'm going to do a very brief run through the various taxes that you need to be thinking about, but I'm going to be focusing more on some of the more recent changes that have been introduced so that you are fully up to date on exactly what it is that you need to know and need to be thinking about. Next slide, please. So the first tax that you would want to be considering is stamp duty. That is a purchase tax that everyone will need to pay when they purchase a unit, whether it's in individual names or in company names. And this slide shows the stepped rates of stamp duty that have traditionally been enforced. And I say that because, as Mark mentioned, we are currently benefiting from a stamp duty holiday that was introduced at the start of the pandemic. Initially, it was set to end on the 31st of March 2021, but it has been extended now for a further 3 months to the 30th of June, and will then be tiered down up until the 30th of September. So what that means is that anyone who's buying a property up to the value of £500,000 actually pays £0 stamp duty. And that benefit applies no matter what the purchase price. The first £500,000 of your purchase price is effectively free of stamp duty. There is an additional 3%, as I've noted on the right-hand side of the table, for anyone who's purchasing a property, and it makes up an additional property in their portfolio, and that is if they own property anywhere in the world already. So that is still applicable. Next slide, please. So in terms of updates to stamp duty, as I mentioned, there's currently a stamp duty holiday, and that will go on until the 30th of June 2021. So if you are able to purchase something quickly and complete on it before the 30th of June 2021, you can benefit from that saving. To give you an illustration, if you were to buy something for £1 million, previously that would have attracted a stamp duty of something like £43,000, but now that is only £28,750. If, as I said, if it's less than £500,000, there's nothing to pay at all. However, as I know many of you on this webinar today are overseas buyers, another change that was introduced from 1st of April was a surcharge for overseas residents of 2%, and that will be payable for all overseas buyers unless they exchanged on a property prior to 11th of March 2021. Or was it, sorry, 11th of March 2019, excuse me, prior to when the introduction was announced. But if you are benefiting from the stamp duty holiday, then that's probably not something that you need to worry about too much. Next slide, please. So moving on, once you've bought a property and you've rented it out, you will need to think about paying income tax on your net rental income. That's after deducting any expenses in the rental. Income tax is paid based on tiered rates for individuals. So the first 37,700 is at 20%, then it goes up to 40%, and anything above £150,000 is at 45%. However, all UK residents and some overseas residents do benefit from a personal allowance. That means the first £12,570 per individual is free of any income tax, and that does apply to Malaysian residents. It's also important to note that that is a per person allowance. That means if the property is owned jointly, each person will benefit from that allowance on their share of the rental income. In terms of updates on income tax, there was a few years ago a restriction introduced on the interest that can be claimed. What was said was that they were going to restrict any interest claim to the basic rate of tax. So for higher rate taxpayers, they don't get a full deduction for their interest as they used to. That change was phased in, as the table on the bottom of the slide shows, but is now fully in place as of April 2021. What's important to note, as I mentioned earlier, is it only affects higher rate taxpayers. And if you are receiving a personal allowance, you would need a fairly substantial portfolio before you were earning higher rates of income tax. So for most of our investors, that doesn't actually have any impact at all. Next slide, please. For those that do have higher rates or thinking about substantial portfolios, high value portfolios, then one of the things that can be done to mitigate the interest rate restriction is to look at a company purchase. Now, there are a number of pros and cons on buying in a company name, but one of the pros is that they do not have this tiered structure, and as such, the interest rate restriction doesn't affect them. Additionally, companies only pay corporation tax, which is at a fixed rate of 19%, so lower than the basic rate of tax and no higher rates of tax. We can advise clients on the pros and cons of buying in a company name or individual names based on their individual circumstances. But one of the other changes that was introduced is that anyone that owns a property in an overseas company name now needs to send in a corporation tax return. Previously, they would be sending income tax returns, but as of April 21, they need to send in this corporation tax return, which is a little bit more complicated. But again, it's something that we can help with as part of our tax return service. Next slide, please. So then, if you are thinking of exiting the market at some point in the future, you will need to consider capital gains tax. Capital gains tax is payable by anyone selling a property on the uplift in value based on the sale price. There is an annual allowance of £12,300 for each individual owner when they sell. So again, if there's joint ownership, each person will benefit from the annual allowance. The rate of capital gains tax is 18% or 28%, and that depends on the income that the vendor has in the year in which they sell the property, but it will be between 18 and 28%. It is slightly more tax advantageous for companies when they sell a property because they pay the corporation tax rate, which, as mentioned, is 19% on the full gain. However, there isn't an allowance. Next slide, please. In terms of any updates to capital gains tax, well, there isn't any, and that's good news because those who would be following the media will have heard that there were lots of rumors about changes to the capital gains tax regime, which were not introduced. I think the UK government have realised that the property market has been quite significant in ensuring the economic recovery from the pandemic, and so we were pleased that there were no increases in capital gains taxes announced as part of the budget earlier this year. Next slide, please. I will touch briefly on the annual tax on envelope dwellings. It doesn't actually affect a lot of our clients who are investors, but if you do own a property in a company name that is valued at over £500,000 and you don't rent it out, then you need to be aware that you will be subject to this annual tax on envelope dwellings. So when you're considering what structure to use to purchase a property, if you're not going to be renting it out, then you do need to bear in mind that this tax may be payable. Next slide, please. Finally, something that investors do need to consider is inheritance tax. Inheritance tax is payable on any UK assets if the owner were to pass away. The first £325,000 of UK asset estate value is exempt from any inheritance tax. Thereafter, it's payable at 40%. It's important then, if you are going to be potentially subject to an inheritance tax liability, that you consider estate planning. Again, that's something that we can help with. Joint ownership helps because you can transfer that allowance. Ensuring you have a loan on the property will bring your estate value down. It's very important that you have a UK will or a will that deals specifically with your UK assets, and you could also consider insurances or lifetime gifts. Next slide, please. In terms of updates, there was a change announced a couple of years ago whereby non-resident companies had been previously exempt from inheritance tax on UK assets, but that was changed so that they would be subject to the same rules as if they own the property in their own right. So shareholders and non-resident companies would be liable for inheritance tax if they were to pass away owning the asset. Next slide, please. So here is a brief summary of the various taxes that are applicable depending on the structure of the purchase. Of course, we can send this information over to anyone who requests it, And we do have a very comprehensive guide to all of these taxes that we have produced and can send on request. Next slide, please. As we've mentioned, at Benham Reeves, we are here to advise our clients on how to maximize their investment. And as many, from the number of inquiries we get regarding tax, it is an important consideration. And we're here to help guide, advise on all aspects of UK property taxes. And as well as that, we do offer a tax return service to take the headache out away from clients, and can assist with all the various returns that they need to file, from income tax returns to capital gains tax return, annual tax on envelope dwellings, and also making payments to HMRC. So if you do need assistance with those kind of services, please do get in touch, either at the email shown on the slides or on the questions and answers on the webinar. I have rushed through that pretty quickly just because I didn't want to go into too much detail on the webinar. We do have further speakers to talk to you, and I am going to be available for any questions that you may have at the end of the webinar. Thank you very much. Back to you, Mark.
Sorry, thank you very much, Vida. And now we're going to pass over to Melvin. Melvin from our KL office. Thank you.
Thank you very much, Mark, Vida. And a lot of people have been asking what are we showcasing today and what are the products to look at post-COVID period. And it's good that Mark mentioned just now the survey that we did in October 2020. And it's very true. Tenants these days are looking for more outside space, a higher internet speed, landscape gardens, a 24-hour concierge service, proximity to parks and rivers, a nearby grocery store, which is new, and not so much of the gimmicks within a property anymore, like cinema rooms, etc., and all that. It's good that you have it. So today, in conjunction with EcoWorld, and we have here with us Lucy, who is also from EcoWorld, and we would like to showcase you a property that we have shortlisted and we believe fits and ticks all these boxes. And I will go into detail now with regards to this property. And we have also lettered here, in which I'll share with you how fast and how quickly this place rents, or this location rents, compared to the city center now. Next slide, please. So this is a very beautiful enclave. Coincidentally, it's called the Claves. And it is not very far. It's just in Zone 4 on the Northern Line on the Mill Hill East Station. And it is a 15-phase regentrification development with 83 acres of land. And it was previously an army barracks. Yeah. And so now it has been planned for 2,240 new homes, schools, a GP surgery, commercial spaces. And EcoWorld is taking up about 159, or if we round it out, about 160 apartments, divided into apartments, townhouses, and mills in this particular area. And the best part about this product is that all apartments come with car parking facility. Now, many of y'all will be thinking where to put your money now. If you were to buy, where to buy now. A property like that comes with a car park, for those of y'all who have bought in London and who have already enjoyed the rentals, you will know that a car park these days costs easily in London about 50,000 to 75,000 pounds. So this particular development ticks all the boxes because it has tube at doorstep, which you can see is the Mill Hill East Station. It has a grocer at doorstep, which is Waitrose. It has the gym. It has the Finsbury golf course, which I'll explain again later. Next slide, please. So this is just a panoramic view of the Claves. And if you can see, you're situated a little bit higher compared to the rest of London. And if you look at this, these are the areas or places where the locals and people would like to be now. And if you look at the BNO buyers from Hong Kong, which Mark has just showcased just now, a lot of them are buying into the Zone 4 area up in Collindale, where there are bigger spaces. The apartments are built a little bit bigger compared to the smaller apartments in central London because space is expensive. So if you go to Zone 3, Zone 4, you will see that the apartments here are built a little bit bigger. And it's true because personally, my unit, which I bought in Zone 3, which is beside the Ali Pali or Alexandra Palace, and I just completed in April this year, and it was letted out within a week. So if you want tenants quick, if you want tenants fast, these are the kinds of product to look at. Next slide, please. So what do you have here? You have a quaint village life, which you have the reservoir, a high street of a village feel. You hop onto the tube in within 23 minutes, you are to the city. You are surrounded by beautiful views, golf course and parks. Why parks are important now, just in case of another lockdown. People want air, people want a balcony, people want to come down and stretch their legs. So all these are the new requirements for purchasers or tenants these days. Yeah, next slide, please. Again, a bird's eye view of this development. As you can see, the Cliffs is right in the center. You are right next to a golf course, and many Malaysians who live within a golf course like Sierra Mas, like Tropicana, you will know that these areas go up in value in terms of property. And you have a tube right at doorstep. It just ticks all the boxes. And you have Waitrose down there. You have Virgin Active, which is a gym. And of course, you have the high streets nearby. Yeah, next slide, please. So this is just how far we are from the city. And if you take from this timing, 20 minutes down via tube, 25 minutes or half an hour to the city center is not that far. Or it gets into King's Cross, Islington, or even Stratford down far east is just within a half an hour's tube ride from the northern line of the Mill Hill station. Next slide, please. And of course, within the Northern Line, not many people know about the Northern Line and how fast it goes down to the city center. As you can see, the Northern Line cuts through centrally down into the city center, into the colleges of UCL, into Holborn, into Euston, which UCL is, into Holborn, which LSE and all that, and King's College is as well. So it's actually quicker and faster to get into the city center from the Northern Line compared to if you're living in the west or the east. Yeah, and this is a little bit of trivia that not many people know. Next slide, please. And of course, Mill Hill, another secret of this area are the excellent schools. Yeah, and you have a wide range of excellent schools which in Ofsted grading, which is either good or outstanding. Yeah, you have the Queen Elizabeth School of Barnet, which is a grammar school for boys, which is ranked third in the UK league table of top 100 schools. So if you look at the small graph there, you will see that all the schools in the rating within 2-kilometer radius are either good or outstanding. So Mill Hill or Millbrook area has been known for their schools, their quaint village lifestyle, and this are the places when you want to exit and when you want to sell to the secondary buyers. These are the kinds of location to look at. The next slide, please. And of course, in this quaint little parcel of Millbrook Park, we have 159 units divided into 2 apartment blocks, which are very low density, mews and townhouses. Some of you are looking for townhouses or mews. We have it here. Yeah. And next slide, please. And this 999 years lease throughout the development. Yeah. So if you can see, these are very low density. Everyone gets their private courtyard. Everyone gets their private gardens. If you can see down there on the bottom right, those are the backyard of the mews, the townhouses where people can enjoy. Particularly many people are working from home now, so can they just come out, get some sun, which is very important in UK and London. Many of you all know during the summer days or even during the winter days. And these are all what makes it rent quickly. And these are the things that tenants are looking for now. Next slide, please. Okay, again, this is the entire parcel of the EcoWorld development. Only 159 units divided into 2 blocks and townhouses and mews. If you can see a little bit, about half of the space that is being used to build gardens so that people can come. You have the best of golf courses, and of course the parks to move and walk by. And next slide, please. Yeah, so of course everyone wants to know about the pricing. Now, one thing very good about EcoWorld developments is that they build big sizable units. Yeah, we have the Trentham House, which is one of the blocks. Yeah, that is completing September 2021 or this year, Q3, Q4 2021. Yeah, one beds are starting from £415,000. One beds are quite sizable when EcoWorld builds it. It's about 500, 550 square feet, and that's usually quite good. And two beds they have from £600,000, but it ranges up to a little bit more, about £900,000, because their two beds are big. It goes from a little bit more from 800 square feet or 900 square feet to about 1,500, 1,400 square feet. So these are big units or sizable units, which in this post-pandemic era, people are looking for, because they need another room to work from home. And of course, if you have families, you have children, you want a little bit sizable space now. The Harewood House is completed. So if you want something that is exempted from the stamp duty or are in line with the stamp duty holiday, you can go for this block. And the Muse and townhouses are about 4 bedrooms. They are 4-bedroom townhouses as well. And these are quite sizable, from about 1,600 to 2,000 over square foot. Now, every unit comes with a car park. That is another 50,000, 75,000 extra to pay for, but this is already inclusive in the purchase price for EcoWorld. If you buy from any other developer, you will have to pay another 50,000 or 75,000 pounds now. So the pricing is inclusive of car park. And of course, for the townhouses, you get a car space for two cars, yeah, 2 parking spaces. Next slide, please. And of course, you have the standard amenities. The 24-hour concierge is important these days. Number one, for security. Number one, because of the online shopping that people are doing. A lot of them are ordering their stuff online, be it by Deliveroo for their food, be it for their Amazon deliveries. As you know, in London, everyone buys everything from Amazon. So a 24-hour concierge is important. So when they come, they leave their things. And the best is you buy the unit on the block, which is the concierge is on. Yeah, then it's easy. They come down, they collect their stuff, and they go back up. You have a residence lounge, you have a games room, you have a gym, you have a media room. Of course, these are all standard. Next slide, please. And just to cover a little bit more, it's 999 years lease throughout this development, or sorry, 999 years lease. The development has a 10-year NHBC building warranty. Yeah, it's a borough of Barnet. You have the ground rent per annum, and you have the completion date down there, which I shared just now. Harewood House is completed, Trentham, and of course, is completing Q3 2021, and then townhouses are completing in 2022. Next slide, please. So this area, Mill Hill, we have been renting out for some of the developments that have been there, and it's very surprising that the developments or the units in this area ran faster than the units we have in Paddington. Some of the developments have completed, or some of the units have completed in this area, and we have rented a dozen or so within 2 weeks. As some of you might say, Zone 4, is it easy to rent? Is it easy to let out? Well, in the post-COVID era, we are seeing that units that have all these greeneries by the side rent faster, and the yield is a little bit better as well, comparing to the central apartments or apartments that are located centrally. And as you can see here, these are what we are achieving in terms of rent on the right-hand side of the slide. And what I have here is historical prices in Mill Hill. The red arrows are the median pricing now, which is in line with what EcoWorld is selling and are pricing at. So it's very transparent in London. You go on, you hop on online, you will know. And of course, if you like to make a purchase, you can always make an offer and to see whether the developer decides. Next slide, please. Yeah, and for those, thank you very much, Lucy, for allowing this. Yeah, for those who attend today as a webinar attendee, EcoWorld is happy to throw in a free furniture pack if you are to make a reservation. If you want to make a reservation and if you want to know more about this development, do email us or do hop on or do text us. with regards to this development, and I'll be more than happy to contact you back. Apart from that, next slide, please. EcoWorld also has developments in the east, yeah, and these are also quite sizable, but in the east you get a little bit more value for money, yeah, and one beds are about 580 square foot, yeah, and it's starting from the low £400,000 to two beds for about £560,000. This is in the O2 region, Canning Town area, and this is also available if you have children who are studying in the universities or are working in the Canary Wharf area. Please do speak to us. Next slide, please. And of course, if you prefer the western side, we have in Kew Bridge West. Yeah, and our office, interestingly, is just opposite, directly opposite of this development, and it's also nearby Mark's office where Mark sits. And again, it is low rise. It is about 200 odd units across this entire development, and you have about 550 square feet for one bedroom, and a two bed is quite sizable. It's about 700, 800 square feet. It's from £450,000 a one bed, and a two bed from £650,000. And this is beside the Kew Gardens, beautiful area, again parks, and these are the units that will be letted out very quickly beside river, beside parks, and these are the units that you bet on now, post-COVID era. Next slide, please. And last but not least, if you fancy townhouses or apartments in Maida Vale or in the central area, Maida Vale is very popular with Malaysians in the W10 postcode. We also have developments there, and the prices here start from £720,000. So that will be starting from the two beds because it's almost sold out now. So with this, I think this ends my presentation for the developments, but please text us. Again, we are research-based, so we are recommending products for you to look at that will let out, and this is from our historical and achieved data. Thank you very much. Mark, over to you. I think we can do the Q&A.
Yeah, thank you very much, Melvin. It's very exciting. I mean, I think there are some very exciting projects, but I appreciate we've run on a little longer because it's 1:45 now. So Lucy's gonna join us, and back with Vida's here. Everybody's here. Look, everybody's excited to answer questions. We've had quite a few, but actually, I think one we should start with is about stamp duty. So a question that I've had, or we've had it kind of in a couple of ways, is if I want to take advantage of stamp duty, is there anything that you have available now? Maybe Lucy could answer that, that's going to be able to get me in ahead of the stamp duty holiday.
Yes, so as Melvin mentioned, we actually have 8 apartments available at the Claves that we would be able to ensure that you complete on in advance of June to get the stamp duty holiday.
And that's only in the Claves you have it, is it?
Yes, yes. Unfortunately, the majority of our completions for the rest of our schemes are at the end of the year.
Okay, which is fine. I mean, one question we had, and maybe Vida wants to take this, is if I agree to buy something that completes at the end of the year, as you say, before the stamp, you know, if I agree to buy it now and exchange before the holiday ends, I think he means, but it's not completed, how does that work? Do I still benefit from the stamp duty, or is that not going to work?
No, unfortunately not. You need to complete by the 30th of June to take advantage of the stamp duty holiday. There is the extended period of time to the 30th of September where there is a reduced holiday, but again you need to complete, which is the key date. So if you do want to take advantage of it, I would suggest that it's important to look to book something in pretty much straight away, as there is a conveyancing process to go through as well.
Okay, that's good. That's quite interesting. It's a shame we can't get benefit from it, but that just means you've got to move quickly if you want to take advantage of it. But let's be honest, I think the one thing I will say with stamp duty is it's really nice to have it, but the most important thing is focusing on a property that's going to do you well from an investment perspective. So people that purely focus on deal and discount, you need to make sure you take into account everything else, even if you're going to have to pay the stamp duty, but it's a much better property or much more in line with what you want, then that's better to take into mind. So here's an interesting question, and maybe everybody can have a stab at this, is what is the perfect time to invest in the UK or London market, especially during the pandemic COVID crisis? Lucy, do you want to take that first?
So sorry, can you just repeat? So it's when the...
What's the perfect time to invest? Should I buy now? Should I wait? What should I do? I think that's what the question.
I would suggest buying now. I think given the the positivity that you spoke about earlier, Mark, also coupled with the stamp duty holiday, it really makes sense to buy now and move quickly.
Okay, great. Melvin, for Malaysians?
I think it's important to buy well, whether you buy now, buy later, buy. But importantly is to buy well, and buying well are products like what we have shared. Again, that people living there have all this area to breathe, because we have to be sure that a development now, if it makes sense, is sort of COVID proof by looking at all these greeneries that they have, and ultimately choosing a development that is right, that your tenant will stay on, that your tenant will prefer to live in, and not these small little cramped products. Yeah, so it's important to buy well, I would say. Yeah.
I agree. I would echo that. That's what I always think, is you shouldn't focus on just the stamp duty saving. I mean, to be fair, the flat that I bought, it was going to be in the stamp duty saving as it happened, but actually I preferred it to complete later because it was benefiting from Crossrail. So I'd rather actually pay a little bit more, but it completes next year after Crossrail. So that's my view. But as Lucy said, I think getting the benefit of stamp duty, if you're going to buy it, then you should take it if you can get it and it works for you. So this is another interesting, a couple of people have asked about mortgages. So I'm based in KL. How easy is it to get a loan, and what's the current rate? I don't know who wants to take that. Lucy, do you know, or do you want Melvin?
I might leave Melvin to that one.
Interestingly enough, up to Zone 4, CIMB Bank this loan now. So we've gotten a loan for Millbrook client by CIMB Bank. So Maybank just up to Zone 3. So CIMB can do up to Zone 4. So if you want a local bank, CIMB is there. But we can also go through mortgage brokers that we can assist you. In fact, we are helping a client now via mortgage broker for a development in Zone 4, which is further off compared to Millbrook. It's in South Hall, in fact. So we have all the mortgage brokers ready. We have HSBC Expat, which does loan if you're a HSBC Premier customer. And we also work closely with the local banks and the local solicitors who work with the local banks. So all these are ready. And if you need advice, please come to the office, or we can do a Zoom call, and we are more than happy to assist. Yeah.
But does it matter for Malaysians because they don't have a credit record? Because as I said, the same person asking mortgages asked, isn't it important to have a credit record anywhere in the banking system in the UK, or do you just not need that?
No. So what will happen is that the mortgage brokers will then just take your details, again, your pay slips. They will build up your credit history and they will present it to the banks. The banks will assess, and then the banks will allow. We actually had a client who was got a UK bank loan, and he was allowed to open a UK bank account as well without being there. It was a miracle of sorts. I don't know how that happened, but they allowed him to open a UK bank account without being there, with the compliance in place now. So yes, we do offer such kind of assistance. Yeah.
Let's be honest. I mean, I talk in my speech, everybody loves London. And one of the reasons everybody loves London is because it's open to everybody. This is the most multicultural, open city and country. I mean, I think globally, we don't prejudice against, UK residents and overseas people. So anybody can buy, anybody can get a loan, as long as you fall into certain criteria. And as Melvin says, you can borrow from Malaysians. Okay, so here's an interesting question. Maybe everybody can have a go at this. In view of the current travel restrictions, do I need to travel to London to purchase a property and then look after it? So do your customers, Lucy, do they have to come to London to make the purchase?
No, no, not at all. We transact regularly with buyers that have never stepped foot in the UK, and I think given the pandemic, our sort of selling skills have completely changed now. Everything that we do is virtual, so we can offer virtual viewings, we can send footage across. We've completely changed the way that we would have typically sold. You don't need to visit a marketing suite anymore.
Great, that makes it much easier, doesn't it?
Yeah.
And you do videos and things like that, I'm assuming.
Yeah. So more than happy. We often meet friends, family. If other people can't travel as well, we're happy to show them around and get a feel for the development.
Okay. What about doing tax return video? Can you do it from overseas or online, or is it easy on paper or?
Yes, actually, there's no need to be in the UK to submit tax returns. We do it for a large majority of our overseas clients electronically. We are set up to submit electronic returns. It is possible to do a paper tax return, but obviously it's much more efficient to use someone like us to submit it electronically.
And same with Melvin, with our clients. You know, do you want to talk a little bit about making it how easy it is or difficult it is if they're not based here?
I think we have a full-fledged office here with our entire KL team. I think we have very few UK or London-based agency, be it lettings or sales, that have an office specifically here. And we have an outreach to all our London branches. So for us, it's very important to have you purchase or recommend something that we can let out, because we can't sell, then our relationship ends there. We have a long-term relationship with all our clients. After the sales process, that's where the hard work comes in, which is the lettings, filing for tax. And our team here, Michelle, Belle, myself, are personally involved with all of the buyers and their properties. And we know their properties back, front, up, down, and their tax profiles and all that. So you don't need to be in London. You just have us as your arms and legs over here, and Mark over there, and we do sitting there, do everything for you. Yes.
That's great. That's great. There's been quite a. I mean, maybe you could take this, Lucy. Why would someone buy from EcoWorld? Is it just because you're a Malaysian developer, or there are lots of quite big developers in the UK? Why would you want to buy from a Malaysian developer? Because some Malaysian developers don't always finish on time.
Well, I can assure you that the London arm do finish on time. I would say, as you mentioned, the London developer market is highly competitive, but I think the biggest difference with us is that with EcoWorld, it's all about the customer. The customer is our number one priority, and through our EcoWorld class service, we'll be with you every step of the way on that journey through your sales process. We have dedicated resident experience and quality control teams that are always checking your apartment, but also there to answer any questions that you should have during the sales process. Coupled with that, we've actually recently won an award for our customer service. So I'm not just talking about it, we've got the evidence as well. And I think the second big thing for us is that we aim to build aspirational developments, as you'll see from the Claves, that are slightly higher than our local competition, but we like to keep them at a competitive price point. So you'll notice that we don't exceed £1,000 a square foot. Everything that we sell is around £750 a square foot, which is the real sweet spot in the London market.
That's really interesting. I mean, someone asked this question, which I thought was quite interesting. Does high building material cost increase the house price in the UK? So there are some countries in the world, and notably, in Brazil and South America, where you agree to buy it today, but by the time you complete, you have to pay more because building costs go up. So does the high building costs increase the house prices? Do you put your prices up because of the building costs?
No, not at all. Not at all. Once we've agreed a price, that is the price that you're getting, regardless of what may happen in between with buildings or the property market. As it rises, if you've secured that price, it stays there. Okay.
Vida, someone's asked, are the inheritance tax of £325,000 based on each property or based on a cumulative basis for many properties?
That's based on your estate value, so your UK estate value at the time of death. So you would look to calculate what the value of all your UK assets are, not on a property basis.
Okay, that's interesting. And just a quick one, going to follow up for video because tax is quite popular. Do you foresee an increase in the annual corporation tax in the near future to recover all the government spending during COVID?
Well, that is an interesting question, and the truth is we do foresee some increase in corporation tax rates in the future, but it is important to realise that compared to many other countries in the world, we're already on a very low rate, and any increase we expect to be marginal, so that we'll still be competitive in terms of attracting business in the UK.
Okay, that's great. Another question here is about what is the best property to buy for investment? So if you're buying for investment purely, what's the most popular? Melvin, do you want to take that first?
Come again, sorry, Mark.
What's the most popular? See on your. What's the most popular property for investing for a London property? What's the best one to buy for return and maybe the easiest to let out? Or
if you're looking for yield, I would say a one bedder. In generally speaking, a studio or a one bedder. That means you just want to park it there and probably pay 50% down, take a low interest rate loan, and just cash out every month and get a high yield. But if you're talking a little bit of lower yield but higher capital gains, then a 2-bed, 2-bath will go a longer way with the car park. That's when you will see the capital gains. It goes a little bit further. It has that extra mile compared to the studios or one beds. But depending on your appetite and your risk profile on what do you want to do with the property, do you have any future plans? So it really depends. But generally, people will go for a studio or a one bedder, and for capital gains, a little bit more of capital gains, a 2-bed, 2-bath.
that's interesting. Do you see that the same as you see where you sell with most popular with investors? What tends to be the most investor from EcoWorld's perspective?
Yeah, typically we would have traditionally seen studios and one beds. They would always disappear first. However, as Melvin was saying, we've seen a slight increase in townhouses and 2-bedroom apartments. So it's no longer that smaller unit. It's actually the large units as well, often with the intention of it being owner-occupier later down the line.
Okay, interesting. Vida, does it affect your taxes if you have a smaller property or bigger property? Does it make any difference?
The size of the property is not relevant. It's more to do with the income, purchase price gain, and that you need to be considering, of course.
So does it make a difference if people have multiple smaller units or one large property? Which would be better? From a tax perspective, it's the same, I'm assuming.
From a tax perspective, yes, it makes no difference. And there are some advantages to multiple smaller units. If you are thinking about a significant investment in the UK, then there is a stamp duty advantage to buying 6 or more units in one go, where you can benefit from commercial rates of stamp duty, which are quite a lot less than the residential units. So that is a factor. But other than that, it's really about thinking, what your goals are and what you're looking to achieve to determine what type of units you should be looking for, not tax on its own.
No, I agree with that. But obviously, minimizing tax is quite good. And as you said, Malaysians do get the personal allowance, which is good. This is interesting, Melvin, because I think, we haven't had too much of this, but it does happen. My tenant in London has been late on his rent and is in arrears due to the COVID situation. What should I do? What have we been doing with clients where we've had issues like this?
I think Bidu will be the better person to. But let me go at it first. I think with us for Benham and Reeves, we strive very hard to be fair to both parties. Like Vidu has created a sort of a questionnaire that if they were to ask for a discount on rent, this should have at least show proof that they have taken a cut on their pay or they have actually lost their jobs. Then we will go back to the landlord and say, hey, they need a pay cut. We will try to solve it amicably. But if push comes to shove, then that is Vidu's department. Vidu, you'd like to.
That's right. I mean, we take, you know, we take seriously the issue regarding rent arrears and tenants who are struggling to pay rent, and unfortunately, it does happen from time to time, and of course, much more during the pandemic. Government guidelines were that landlords and tenants should come to amicable arrangements, and we helped a number of our clients broker those deals, because having to take tenants to court and evict them for non-payment of rent can be costly, and we want to avoid that. And I'm pleased to say that I think we managed to see our way out of many of the issues tenants were facing by open communication, fair negotiation, and just dealing with things on a fair and reasonable basis. And so, there has to be some level of social responsibility in this kind of global pandemic that we are conscious of. But at the same time, we will always be there to guide our clients on the best solution for them and work closely with them in that regard.
Okay, perfect. Yeah, I think we do try to help, and you have to be empathetic. And remember, this is a short period of time. We're moving past COVID now, so hopefully we're going to see a return to normality. One question, maybe Lucy can take this, I don't know if you want to, is about EWS1 forms. So it is, if anybody doesn't know what the maybe Lucy can explain what EWS1 form, what it means, and how, whether you get them and how it affects things.
Yes, so following the tragedy of Grenfell Tower, there's been a change in regulations in regards to new build developments and certification that they require. So as you quite rightly said, all buildings now require an EWS1 form, and lenders do require to see that. I am pleased to say that the Claves has their EWS1 form in phase 1. And all of our schemes, upon completion, you will receive the EWS1 form to share with your lender. So financing is not an issue.
If you have the EWS1 form.
Yeah.
Okay, fine. So all of your schemes have them. And in fact, I think most new developers building now will have the EWS1 form. Yeah, you're going to, particularly new builds anyway. You can't really function without that form. So it will be available. The second-hand market too, or you don't have to worry about it on second-hand homes? I'm not 100% sure. I think on the second-hand market of existing developments, then yes, you still require it. But again, that's something the managing agent will be working towards getting.
Yes, maybe if I can add to that. I mean, we look after a number of developments, obviously, in London, and what we've been seeing is many of them have already had the certificates put in place, and the ones that don't are actively working towards it. So they're taking it seriously. And I think for reputable developers, there's certainly nothing that investors need to worry about. Okay.
I mean, there are a couple more tax questions that have come up, but I think Vida will respond to those. I think it's 10 past the hour, so we've been doing over an hour, which thank you everybody for joining. I'm going to ask one final question that everybody can give their quick fire answer to. Is what would be your number one reason to invest in London now? Go on, Lucy.
Property growth, the forecast at the moment.
Excellent.
Safe investment.
Capital gains.
Yeah.
Great. Vida?
For me, a home for my children, and get them on the property ladder now, so that they won't find it difficult when they come of age to go out on their own. Is something that I'm interested in achieving.
Great. And Melvin, because you bought from KL, so even better.
Yeah, I think it's good to emulate what happened with the Hong Kong properties during SARS. Those who made money bought the property during the last SARS pandemic. I think there's an opportunity in every crisis. The pound to ringgit is still relatively low now, although it has risen a bit. And I feel that it will still go up further once they've gotten everything on Brexit right, once this pandemic crosses over and the UK gains its strength in the economic sectors. I think we will see a boom in properties and the pound definitely. So if you want to hedge against your ringgit, I think it's a good time to go into the London property now. Definitely.
Good. And I agree with what everybody said. I agree. You know, I think buying for children is a really good thing. And a lot of our Malaysian clients buy for their children, which Vida says, and the money, the capital growth they see often will pay for the education as well as forgetting just as an investment, as a place to stay. It does incredibly well. But it is for me, the thing that makes property stand out is the fact you can get finance on it. So you're not even putting all your money down. You get capital gain based on the total amount, and you get a rental income which will cover a mortgage as long as you don't go mad and ask for 80-90%. So I think it's a very good, stable investment. So that's us. So thank you so much for joining today. I'm sorry I didn't get around to everybody's questions, but if you've got anything, contact me or contact Melvin. And thank you very much, Lucy, Vida, Melvin, for joining us today, and hope you enjoyed it. Thank you.
Thank you.